The Minority Market. Episode 65. How to Review and Improve Your Overall Approach. Most people in the market focus only on results. Profit feels good. Loss feels bad. But the minority understands something deeper. Results are only symptoms. The real work happens in reviewing behavior, decisions, and processes. If you want long-term consistency, you must learn how to review and improve your overall approach, not just celebrate wins or fear losses. Reviewing is not about blaming yourself. It is about observing yourself objectively. Emotional reactions hide real lessons. Calm observation reveals patterns. When you review properly, you stop repeating the same mistakes and start building real progress. The first mistake beginners make is reviewing only when they lose money. This creates emotional bias. You should review both wins and losses. Winning trades can hide bad habits. Losing trades can sometimes be executed perfectly. The minority reviews process, not outcome. Start with mindset review. Ask yourself simple but powerful questions. Was I patient before entering? Did I follow my rules? Did fear or greed influence my decisions? Did I act out of boredom or impulse? These questions expose emotional weaknesses that silently damage performance. Next comes strategy and structure review. Did the setup match your plan? Did you respect entry and exit logic? Did you size your position correctly? Many traders think they have a system, but their execution is inconsistent. Reviewing helps align behavior with structure. Then, review risk management. This is where survival is decided. Did you protect capital? Did you respect stop levels? Did you overexpose yourself emotionally or financially? One bad risk decision can destroy months of progress. The minority treats risk review as a priority. Another critical area is time-based review. Look at weekly and monthly patterns. Are you trading too frequently? Are you forcing opportunities? Are you impatient with long-term positions? Time perspective reveals behavioral habits that daily reviews often miss. Data is powerful when used correctly. Keep simple records. Entry reason, exit reason, emotional state, and outcome. Over time, patterns appear. You may notice repeated mistakes during certain emotions. You may discover that certain setups work better for your personality. This self-awareness becomes a competitive advantage. Improvement is not about adding complexity. Many people react to mistakes by adding more indicators, more strategies, more rules. The minority simplifies. They remove what does not work. They strengthen what works consistently. Progress comes from refinement, not overload. Another important concept is separating controllable and uncontrollable factors. You cannot control market direction. You cannot control news events. You can control preparation, discipline, risk, and emotional response. Focus improvement on what you can control. Reviewing also helps adjust expectations. Unrealistic goals create pressure and emotional instability. When you review your actual performance patterns, you learn what is realistic for your skill level and capital size. This realism builds patience and consistency. One powerful habit is end-of-week reflection. Sit quietly and replay decisions. Not to judge, but to observe. Ask what you did well and what needs improvement. Small weekly improvements compound faster than occasional big changes. Another overlooked aspect is energy management. Fatigue, stress, and distraction affect decision quality. Review your physical and mental state during trades. The minority treats health and focus as performance tools, not personal matters. Improvement is also about adaptation. Markets evolve. Volatility changes. Behavior cycles repeat. Reviewing helps you adapt without abandoning your core principles. Flexibility combined with discipline is the real balance. Many people chase perfection. This creates frustration. The minority aims for steady improvement. 1% better decisions repeated consistently create massive long-term impact. Progress is gradual, not dramatic. A powerful mindset shift is moving from emotional attachment to learning attachment. When learning becomes the goal, losses become feedback instead of pain. This shift reduces fear and increases growth speed. Another key principle is building feedback loops. Your system should teach you. Your journal should guide you. Your reviews should shape future behavior. When feedback loops exist, improvement becomes automatic. The minority also understands that review is not a one-time activity. It is a continuous cycle. Plan, execute, review, adjust, repeat. This cycle builds mastery over time. When you avoid review, mistakes repeat. When you embrace review, improvement becomes inevitable. The difference between average and exceptional performance is not talent. It is disciplined reflection. Remember, markets reward those who evolve. If you stay the same, results stagnate. If you review honestly and improve patiently, growth becomes unavoidable. Your goal is not to become perfect. Your goal is to become better than your previous version. When you compete with yourself instead of others, consistency becomes easier. This is how the minority builds long-term edge, not by predicting markets, but by refining behavior, improving process, and strengthening discipline. If you commit to reviewing your approach regularly, you will slowly shift from emotional reaction to structured execution. That shift is where real market maturity begins. Review is not weakness. Review is strength. It is the habit that transforms experience into wisdom.